Okay, so line up your questions, ladies and gentlemen. I'm going to invite Jean Massey. Jean, where are you? Juan, Pablo, Sampere. They'll all correct my pronunciation later, no doubt. You know, I'm obviously a very experienced linguist. Gil Picovsky and Ken Silverman to join me for the closing panel. So, gentlemen, if maybe we could start at the far end, without saying too much about Tokenisation, although it does relate strongly to something we heard from Cora in terms of having a market, well, you know, in Latin America, in its sights and in mind. Would you just tell us a little bit about both your background and what you do now, and then maybe we can kind of circulate and come back to Jean at the end. Do you want to use the microphone?
Just.
It's on. It's okay. Go ahead.
Hello? Hello?
Yeah, we can hear you.
So, thank you for being here today. I'm really honored for being here today. I am a professor of business administration. I'm also the founder of one company, several other companies in the past. My latest company is called Tokenisation, and basically it creates a cryptocurrency to develop a level playing field for business-to-business trading in Latin America. So companies in Latin America will be able to trade between different countries based on their reputation with a proven business model that's been used elsewhere with great success. So we really don't invent anything, just the cryptocurrency to level the playing field.
As you know from what Sidney said earlier, we can't endorse any of the ICOs involved in any way today, but I will say that when we had a recent pitch session in front of a big group of Chinese investors, a certain gentleman did shine rather, and yes, Ken, would you introduce yourself next?
Yeah, sure. Hi everyone, my name is Ken Silverman. I'm a computer engineer, 20 years plus, back in the early days of AI. Founded a company called WebMind with my old partner Ben Gertzel, who's now the head of SingularityNet. Right now I have two platforms. One of them is a real estate equitization and tokenization portal, an app of DAOs, if you will. And the other one is called NationPay.io, which is a banking platform and payments network. What distinguishes us there is we have a patent pending on the ability to transfer the promisee in a promisor-promisee relationship, which means essentially that we can treat credit as cash, and it can move through a system backed by banks as if it were cash. And I'll tell you a little bit more about that later. I believe we're going to show a video on that later, toward the end of the show.
Great. Gil.
Hi everyone. My name is Gil Picovsky. I'm originally from France, but I've been living for the last 20 years in Israel. I've had, so for 20 years my name was Gil Picovsky, and then it became Gil Picovsky. I've had quite an extensive financial career. I was an investment banker for quite many years, and I thought of speaking about this, but I'll speak about this in length after lunch. I'll present to you a new venture that I'm a co-founder of, where we're bringing, in one sentence, blockchain to an old and ancient industry that is the wine industry.
Right. And Jean.
I'm one of those people you need to watch out for. I'm an advisor. For many years, I've been a speaker in crowdfunding events and consultant to companies that were trying to affect their crowdfunding offerings. And I'm slowly making the transition into ICOs and token offerings. I've had the great good fortune to working with Howard Prager and Andy Finch on this IT biometrics fingerprint wallet, which I think is one of the most interesting products and potentially disruptive products to come along in quite some time. Media Shares is my company, and we primarily do live internet and recorded broadcasts. We're doing the live broadcast today, and that could be a good spot, because now that Facebook and Twitter and MailChimp do not allow the words blockchain or ICO in your advertising, I think maybe we'll be able to do more business because of that. I'm advising companies primarily on real securities offerings. I'm still rather skeptical about ICOs. A guy came to my office a couple of weeks back and said, "Well, we don't want to give away any equity. We just want to get some money." And I said, "Well, why don't we do a securities offering?" He says, "Oh, that's a lot of trouble. We just want to sell tokens and get some money to grow the business." And so my issue now is I'm a bit of a skeptic with the ICO business. I know that it's the future in some manner, and it will evolve like a lot of things do. So that's basically Gene Massey with Media Shares.
Thank you. Okay, so in this panel, we're going to talk about the potential globally, in the UK, in the US, around the world, of tokenization more generally, and blockchain. We're not going to be too limited on that, but we're going to look at both sides of the altcoin, right? So what is the potential? What's the potential for tokenization? But also, some of the roadblocks, and I know we have some great expertise on the panel in terms of, some of the issues around AML, anti-money laundering, and KYC type issues. And we'll come to those in a few moments. But first, again, you got the microphone. Juan, how did you manage that? How did you do that? Well done. Maybe you'd kick us off. What's the potential, not just now, but in the future, of tokenization and tokens?
Well, normally when an emergent technology like this becomes widespread, there are two types of reactions. There are people that see that as an opportunity. There are other people that see that as a threat. Funny enough, the most powerful countries in the world see that as a threat, and that's for us a great opportunity for changing the status quo. So that would be one thing that I would consider. Those countries, for example, the US, that see this as a threat, and basically they threat everyone and their dog that if they participate in an ICO, they will burn in hell forever because they are not paying US taxes for some reason. Well, that's the excuse, but there might be a deeper reason for why they don't really want to be into that game.
Okay. Ken?
Sure. I think the future is totally dependent on the regulation. And I think the regulation is going such that everything will be an equity token. You want to have a utility token, then there's certain steps that you would have to follow. And I take this back to a conversation I had a few weeks ago when I was speaking in Fort Lauderdale, and I was staying at my mom's. It was an excuse to go to Florida to see my mom. And I said I was speaking about utility versus equity and tokens, and she said, what's a token? She said, in my day, we'd go to the amusement park and we'd change in dollars and we'd get tokens and we'd be able to play the games, right? And I said, you know what, Mom? That's exactly it. That's what a token is. And, in the case of a utility token, that token was actually serving a purpose. You could play the games and you wouldn't have to worry if the tokens were stolen from the machine, because the cash backing those tokens was in a vault behind the counter. So questions about utility versus equity is one facet of the conversation. The other is, what are you providing? What service are you providing? What, in the case of the equity side, one thing that we're doing with RealSafe is we're providing, as I said, a DApp of DAOs where the token itself represents equity in the company. Legitimately, equity. The token is a share in the company, any particular company that wants to be on the portal. So in that case, of course, there's a future for it, because then the token can become incredibly liquid if you have a decentralized exchange in the center, and companies can trade tokens, and you could buy $5 with the Empire State Building, for example. In the case of a service, to actually have a utility token, you have to, and the technology exists for this, by the way, you have to be able to freeze the token so that it can only be sold back to the organization that's offering the service, and to perform the service, so that the token is not sold or traded for the purposes of investment, right? And this is easily done. You also have to consider actually freezing the token for a 12-month period if you're treating it as an equity token, which most people do not do.
Yeah.
But, you know...
let's come on to the mechanics of it a bit later on.
Yeah, sure.
But,
sure. Last, I just want to say, you look at the history, people are becoming more savvy to this now. There's U-Trust, there's D-Corp, there's other companies that have actually, even though they've issued the tokens, they're saying, wait, now we're going to change our token, you have to get a new token, and you have to give us some KYC first. So people are savvy as to what's coming and handling things as if everything will be an equity token. And, state of Wyoming is another thing to discuss later on.
Yeah, we'll go to, I know Gene wants to come in on that in a moment, but let me just do this. Let me offer you a token.
Oh, thank you very much. Can I have one too?
Well, you can pass it along if you can get it. I'll come back on that in a moment. Gene.
Can I trade it? I got dollars.
Can I see the mic? £20.
Can I see the mic?
Yeah, the mic, please. Well, let Gene come back on that on Ken's contribution, then we'll come to you.
In 1998, I filed a U.S. patent for selling a single share of stock and giving a video as a dividend and getting clips from the set. You get a contest to have dinner with the stars and had all kinds of these wonderful benefits if you bought a single share of stock. So in effect, it was a token. And so my question would be, why have a token? You can have dividends with a share of stock. I can go sell the share of stock, it's tradable, I can see it listed on the exchange, it's all governed. If you lose it, you can get your money back, it's all perfect, a share of stock, and you can have, and the board of directors can offer all sorts of benefits that are the same as a token. So why would you have a token when you can have a share of stock with dividends of anything you can think of?
Well, let's see what Gil. Sorry, Ken. Let's see what Gil has to say next, and then we'll go from there.
Look, first, I don't want to get into that debate of. I saw that terrific slide about all kind of tokens that I didn't even know. So I said there's the security token, the utility token. I think that the regulator will come at an end, having their say about this. I believe that coming from corporate finance, it all has somehow to do with security, related as security. But there's something I would want to point also coming from that corporate finance world, and also coming from a small country that is a hub of entrepreneurship. I think that there's a great thing that is happening, and we've touched it with the millennium people that didn't know how to trade gold, didn't know how to buy stocks. In Israel, you got 6,000 startups that are all willing to raise capital. And so you raise capital at seed money, and then you need to go to your A round, and you go to your B round, and you constantly go and raise capital. And you constantly go and look for new avenues to raise capital. And there is a statistic I read when we opened up a strong avenue towards China, which is very keen on investing in the Israeli innovation, that was saying that 90% of the VCs around the world invest at a radius of 500 kilometers from their headquarters. And I think that what we have now is something that is credible, because we have a new way for entrepreneurs. Put away the scam and put away the metronome story that we will have, because I think that at the end, we spoke about statistics, the best will stay. You have a great way for an entrepreneur today to raise capital for a project, while people were thinking that the exit of a company would be the IPO, which was completely false. It's the beginning of a story. When a company goes public, it's a big bet for the management and for the company itself that needs to deliver after the IPO. You got this ICO system that you still need to find his balance and way, but there's a big change that is, for me, a tremendous way for entrepreneurship to develop.
Great. Gail, just briefly, Ken, if you want to come back on from earlier, very briefly.
Can you sell your share to somebody without an attorney or without a pen and paper, without a meeting?
That's
can you?
The problem.
And if you
There's
can,
something called bearer shares.
okay. So you're still signing them over to somebody. It takes more. Okay. It takes more than a few seconds to send them over. In the case of liquidity, in the case of reporting at tax time, you need transfer agents. Oh, sorry. In the case of reporting at tax time, you need transfer agents. RealSafe is just an example of probably other mechanisms and other platforms that will exist shortly where you can trade tokens or shares in an instant, and you know who the current owners are. You can push a button as the CFO and say, we're not having more than 34 owners to meet with such and such regulation. We're not having more than 99 owners. One owner cannot transfer to another unless 1 month has gone by or 15 days. The most incredible things are possible with tokens. That's just the brief answer. There is a long answer, which for another time. But.
Okay. So before we move on to the next section, and we'll go to questions from the audience in a little while. Just on that, let me try to round that out a little bit on tokens. So I think there's a general agreement that it's a really good thing that millennials are being drawn in. Yeah? Would we all agree that that's a good thing so long as it's done well?
I don't know.
You don't know, okay, so I think it's a good thing. You mentioned that in the traditional economy there's this 500-kilometre circle, and that's been broken, right? So it is opening things up. But I think back 5 years to when the FCA here, they were the FSA then, first reacted to the advent of crowdfunding here in the UK. And they put out horrifying, muddying press releases that I fought against in the press because they were unable at that point to make a distinction between equity and a new form of funding that we now know and recognise as seed crowdfunding or rewards crowdfunding. And this is a new model. If you doubt that, please go and get a book called New Routes to Funding that I wrote about this, and let me know if you can refute the arguments in it. And for my part, there's absolutely no doubt in my mind that the Gibraltar Blockchain Exchange and the vision behind it of having and supporting utility tokens that can do different things on a different basis to equity is right and open things up. If anyone wants to come back, then we'll go to questions.
Yeah, I could comment briefly on that. So you talk about crowdfunding. We're talking about a mechanism of raising money and what's given in return, tokens. You have to ask yourself what purpose are the tokens serving in the particular instance. If you want to talk about what they really serve, are they equity, are they not? In the case of Kodak, which my colleague was talking about earlier, do you have access to that IP, the infinite IP that Kodak has just because you have tokens? Probably not. I mean, maybe you do. I haven't read the white paper on the Kodak offering, but my inclination would be to say no. The reason the SEC is so hot on this now is because the correlation between the popularity of the network, in the case of a utility token, the correlation between how well that network performs, how many people are using the service, and how well that token performs in value. And it's what's its value? Because there's so much demand for the service, the value of the token goes up. And perhaps the token structure is wisely set up so that they're using their fees that they generate to actually buy a token back and create liquidity on the exchange. There's a myriad of ways to set up the structure, but based on that, there's a relationship between the value of the token and the performance of the network. That relationship is the cause of great concern to regulators for obvious reasons. It's a utility token, but it's really an equity token.
Yeah.
So,
and to be honest, Ken, and we will move to questions in a second, Juan, that's one of, that's why I think it's so parallel. So back then, it was of grave concern because this was uncharted territory back then, and we're still charting it. Juan?
Just very, very briefly, I wanted to say that I don't think regulators have concerns. I think that they have interests, okay? And that you can summarize this discussion between two very different streams, So first one is regulators, governments, countries want to know who has the money and want to control the people who has the money. That's one thing. And the other extreme is that people have a fundamental right to invest in anything they want, being it a scam, not a scam, a dog, a cow, or anything that you might desire to invest in, okay? So these are the two extremes of this discussion. Fever is not a cause, it's a symptom. So all these things about liquidity, concerns, and all these sort of things, don't let the smug, not let you see what's really going on, which is that there are people with interests, you play your game.
Okay, so I'm going to go to questions from the audience. I'm not allowed to show any fear or favour, but if anyone who's read the book in the room, and I know there are one or two, would like to ask a question first, please put your hand up now. Otherwise, it's open to everyone. Who'd like to ask a question? Thomas, was that you? Did you have a question? Could we get the microphone? Oh, let me see if I can get you the microphone. I don't know where the other one's gone. Can I borrow this for a moment? Step forward.
Step forward.
Mr. Thomas Power.
Gentlemen, the thing about your mum and the tokens in Florida and your point about it's not new, what about the game element? People love playing this tokenomics game, cryptonomics game, collecting the tokens, selling them down, moving them on.
what about the game?
Is this any different to buying tokens in any computer game that we've seen in the last 30 years? Really? Is it just a fun game rather than an investment play?
So the thing is, with those fun games, if anyone can hear, you don't see, your friends buy the tokens and then they go to play the favorite video game. How many of them, oh, sorry, can everyone hear?
Yeah.
How many of those people who are playing their favorite video games when you were a kid with a token, how many of them before they stick that token into the machine are saying, wait a minute, I think it's going to go up in value in the next couple minutes and I'm going to sell it to my friend over here. That's what the SEC is concerned about. They want to protect U.S. investors, right? Now, fortunately, technologically, at least through smart contracts on various platforms, not just the Turing Complete Ethereum platform, it's possible to protect for that and to stop that from happening. Nobody's doing it. I mean, we are. Some other people are starting to think about doing that. But you understand the concept? So, that you have to think like an SEC regulator to not have to worry about SEC regulation, right? And there's some obvious things to think about that people just aren't thinking about. So just try and look at it that way. You're not selling your token to your best friend. You're playing that video game. And there's ways to ensure that you're actually going to be playing that video game with the token. Then it's a utility token. And then you have to also worry about volatility. You have to worry about actually controlling the value of that token, so it's always worth one video game, right? I mean, people are doing various tricky things to change the price relative to the dollar as it goes up in value, because the cost of the service shouldn't be $2,000 to play that video game. It should be $1 what the token was originally valued at before it went up 2,000%, right? So now then they lower the value, and there's all of these things to consider from an SEC angle. And once you start thinking like a regulator, then you can responsibly regulate your token and protect potential investors who shouldn't be investors. They should be users of your service if it's a utility token. Right?
Okay, so I've got a question for the whole panel, right? And I'd like to do this pretty quick fire down the panel, right? So as far as regulation is concerned, should innovation fit in with the regulation we have? Or should regulation be adapted to accommodate innovation? You all know my answer to this, so but I'm interested to see what the panel says.
Not only should regulations be adapted. They should be changed completely. I can go to Las Vegas and put my Social Security check, and I do get one, on red 29. I can gamble with my money if I want. But if I'm an unaccredited investor, I can't invest in certain things because the government's trying to protect me because I'm poor and stupid. There was something.
How did you get on the panel?
The SEC, the past SEC commissioner, could not invest because he was not an accredited investor. And so obviously the rules need to change. Some wonderfully innovative new young people came up with this whole concept of coins and tokens and everything, largely to participate in this type of funding without all the regulations. That's my feeling. And at some point it will evolve. Yeah. And you'll be able to see it being used on a grander scale.
I see what you're saying, but just as a point of history, I recently interviewed the man who invented the ICO, a chap called J.R. Willett. And he did that because he had a burning desire to innovate. In particular, he came up with the second Bitcoin paper because he wanted to add programmability, which is now, of course, de rigueur across the board, you know, from Ethereum on, but he wanted to add that to Bitcoin, and he looked around, and lots of people wanted him to do it, and he thought, well, maybe I can crowdfund this, and that's where it came from, and it snowballed from there. So I don't, there was no ill intent in the first instance, but you know, there certainly has been plenty of people thinking, well, this could be a good way around since. That's for sure. Juan.
Okay, so very fast, but. Some of you probably have Skype on your computer, right, to make phone calls and stuff. Now, you've noticed Skype is mostly used for international calls. It is used for international calls because for national calls, there is no need. You just pick up the phone and probably you have one of these flat rates things that you don't have to pay more for it. Now, how does that happen? Well, it turns out that when it's national competition, incumbents, big firms, have a much easier time getting all together and arranging a solution for a new potential threat. When it comes to international competition, and you have to get along with other people that you don't do business usually with, or they are not under your regulation, then it's much more difficult. And that's how Skype got away with murder, by doing international calls, not national calls. The national market is pretty much still dominated by companies today. So two more thoughts about this. The first one is I think that we are over-relying on this expected regulation that is going to come to save us all. I think we're in for a big surprise, not a positive one. Now, the good news is that governments are not really comfortable with doing these kind of regulations because this is not about regulation, it's about enforcement. You can always go away to another country. You can always find somewhere else that you can do it easier, or they don't give you the problems that they are giving you at home. And these days, with this technology, very easy to do. So maybe Skype is a component.
When I was in LA recently, the chair there, I would just leave the microphone with Juan for one more second. She's got a beautiful Russian accent, Victoria Stolchenko, and she said to me, "Answer I can't do it. The question, is it adapt or is it fit in?"
You mean
regulation? What should it do?
No, it's going to be brutally aggressive.
Yeah.
I mean, it's not going to be anything.
But should it adapt or should innovation be made to fit in?
I mean, normal reaction to a threat normally tends to be really destructive. In theory, it should adapt, but countries have a very long history of maladapting to this sort of technological innovation. So this is not going to be an exception.
Okay. So, as you said before, there's competition as well. Ken. So, I'm not going to be quite as brutal as I was just now because he'd had a time to inform us. But the question fundamentally is the same: should regulation be adapted to accommodate innovation, or the other way around?
I think over time, clearly it does. Regulation does adapt to accommodate innovation. It just takes a lot of time. And I think what's happening right now is regulation, at least in the U.S., is softening, right, with Reg A and Plus and CF moving from 1 million to 5 million in crowdfunding shortly.
Yeah, they're small numbers, aren't they?
They're small numbers, but they're moving. They're moving up, right?
Slowly.
Even Reg A Plus is a little difficult still. You know, even Tier 1, Tier 2, whether you're gonna register in each state, whether you're gonna try and not take accredited investors, but therefore have to supply financial information once or twice a year. But they are getting better. So to answer the question, yeah, I think it's a middle ground, and I think innovation is moving regardless of regulation. And there's always those first few people, some of which go to jail, most of which don't. Most people are saying that the SEC really doesn't want to do what they're doing. They don't want to attack the few people they're attacking, and but they always got to pick somebody. And if you pretty much the rule of thumb is stay under 25 million, and nobody's going to bother you. But I think it's a hybrid answer.
Yeah, I really, a bit of both, really, isn't it?
Yeah.
So a bit of both, or not?
Yeah, definitely a bit of both. But I think there's two things. The fact that, not to forget, the regulator is here to protect the citizen of his country.
Absolutely.
Okay,
that's a given.
Can come with a project from somewhere else, from some other place, and we speak about jurisdictions in which to run these ICOs, etc. It's the regulator is protecting the citizen of his specific country. Will I be able to address them or not? I think that no doubt regulation will come towards business the same as law has come towards to facilitate business, or at least conceptually. But I think that there's one other thing that we discuss here. We speak all the time about regulation, about these tokens. As you said, your mom comparing them to the Disney tokens, etc. We speak about regulation because there's money involved. It's not that I've become
of course, yeah.
No, I've become an expert in a certain game to know how to win a sword and a helmet, and I gain these tokens to play again and be able to pass them away. It is money involved, and this is where the whole regulation part needs to jump in and needs to.
Yeah, I think we've got a shared assumption. I'm going to make sure. I'm going to assume we've got a shared assumption. That is, we don't want fraud to happen. We want it to be limited, and we want people to be protected, and that's part of it. So I'm aware that we stand in jeopardy, gentlemen. And I'm also aware that where are the ladies? We must remedy that next time, okay? And we stand in jeopardy because standing between an audience and their lunch is standing in jeopardy. So we're going to be really quick. So finally, some people say that tokens and ICOs are about blockchain projects. Tokens. Maybe they've got a wider scope than that. Maybe they could be used for a company that did something to do with wine, for example. So I'm going to ask you to lead off very quickly on this. We're going to do quick fire and comment on that. But what's the scope? What's the scope of the potential here, Gil?
Look, I think the same way you go and speak to a SaaS company today. Nobody's speaking to you and develop about them using that cloud or this cloud, etc. I think that blockchain is definitely a technology that is here to change and to disrupt many industries, and probably most. So I think that we can speak about blockchain to all around the scope, and that would become, to my opinion, a technology that would be a generic technology for most industries.
Yeah. So we'll hear more from you this afternoon on wine and this technology. Ken, do you want to comment?
Well, so if you consider that there's commodity tokens, there's value tokens, there's utility in terms of at least conceptually speaking, and equity. The future is ripe for all of them. I mean, in America, Bitcoin is still considered I believe, property. Not real property. They took the word real out of it, but it's still property. In some other countries, it's a commodity. Whatever rules relate to that and tax implications and whatever vary depending on what they're calling it today. But the future for tokens in across the board is I believe, great. You know.
Yeah, great future, great. So, Juan.
Very, very fast. Let me tell you, we have a big problem in the world, and it's called stagnation. That is, there are many countries in the world that don't grow. Growth in countries comes from technological enablers, okay? New technologies that allow us to do things that we couldn't do before, okay? Tokens, cryptocurrencies, and the blockchain are an example of these enablers. There are many more, okay? Governments are happy if they can collect taxes out of that, okay? Problem is that many of these technological enablers are also changing the status quo of who rules and who controls what in each country. So with having that said, just play your game. Thank you.
You have to look at history, and in history, there were railroads, there was radio, there was television, and every single one of the developments that came along had a hockey stick at first, and then it crashed, and then it had a long, slow climb.
Yeah.
And that's what's going to happen here, is my psychic prediction, is that everybody's all excited about right now, about blockchain, ICOs, coins, things. One day it'll be like television.
Yeah.
It'll be ordinary. It'll be part of the model. It'll morph into different things according to the regulations and people's usage, and people will get excited about it and maybe get bored about it or whatever. But one day it'll be like the railroad or radio or television. It'll just be another thing.
Okay, so we'll be moving to lunch in a moment or two because I'm feeling the pressure of that jeopardy. But please, would you thank the panel?